Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpsummit.com forum and read my analysis for the week before watching this daily video. Welcome back, everybody. Let's keep up with the euro currency. So in general, market shows the performance that we discussed in our weekly report. We have suggested that this downward action should continue just because on a fundamental point of view, it's very important events have happened 2 weeks ago as market have got the new inputs, the new driving factors, and it's right now starts to work with them. We have actually spent two weekly reports, dedicated 2 weekly reports to this subject, and we have really detailed explanation, detailed analysis what real new drivers stand on the market right now. And we come to conclusion that these drivers will work for a considerable period of time, at least till the end of the year or maybe even longer. And from that standpoint, market right now stands just in the beginning of this action. Currently, nobody cares about the possible September rate cut by the Fed because it mostly already is priced in, and right now some clarity stands in the minds of the investors what Fed tries to do. And that is not some recession struggle, but they trying to take steps in advance of possible worsened situation, and they try to prolong the existed good performance of the United States economy. That's what Fed trying to do. And now, I suppose, majority of traders understand that, and they take corresponding steps in this direction. This is trying to spin up its portfolios and taking the positions. So I will not be surprised if we will get by the end of the week CFTC report where you will see the increasing of the net short speculative positions against the euro. So that will be absolutely normal in the current situation. The other side of the medal is actually situation in the European Union that is becoming worse. And this disbalance leads to more dollar appreciation in this currency pair. So what we have on the technical chart, market hits our XOP. So that's our initial ABC top pattern. That was the OP minor reaction. This was OP retracement. Now market hits the XOP. Here was another target in the intraday charts. I will show you a bit later. At the same time, on the daily, we have the butterfly, and by the action with this butterfly, you can see the fast acceleration right to the target. So this tells that we should go right to the 1618 extension of the butterfly, that is 109 approximately. 109 even, 10888 actually. But market can't do this immediately. So because we currently do not have some big events, we do not have today some big releases, and market stands oversold. So probably this will be our continuation, but with a slow pace of that as it stands in the two recent sessions. So take a look what is going on actually. Hits oversold, minor pullback within the session, hits oversold, minor pullback, and again. Here's again minor pullback probably could happen. Then market will continue move lower. So market gradually will continue downside action, moving to following targets. Next target will be the OP of our larger ABC top pattern that stands approximately 108.30. So we do not consider it right now just because it stands significantly lower than the oversold level, and currently we are mostly focused on this area. That's what we have on the daily. On the 4-hour time frame chart, we have our inner ABCD pattern inner to the butterfly. So that's actually our butterfly, and that pattern stands inside of it. You can see OP has been hit minor reaction. Now its market goes to the XOP. XOP again 108.44. It's very close to the daily larger OP target. And all this stuff is coiling around 109.35 area, which is a yearly pivot support 1. So that will be very important level. if market will break the yearly pivot support one, it will tell you on a yearly basis that we have new bearish trend. So this is not the retracement of the former bullish trend, so right to the yearly pivot support one, but this is new bearish trend, and I suggest that probably this will happen. So because even from the technical point of view, if we'll take a look, guys, on the monthly chart, you will see that you do not have any support right from this point till the 103 lows. So this is free space. The last major support was 111.85, and the market already has broken it. So here, except maybe daily average sold, because market noted average sold on the weekly, on the monthly as well, you do not have any other support. So that's actually absolutely free space right when the 6 points to the 103 bottom. And that is really a thrilling moment for the bears. Besides here, you can see the acceleration, which tells you that you can see the CD leg much steeper than the AB, and it's definitely market should continue move lower. So on the hourly chart, you could see this price action that we have just described, hitting the oversold pullback, hitting oversold minor pullback. Here's again XLP and oversold, even we expect some pullback. And take a look that the recent retracement was just half of the harmonic swing. So here was the normal harmonic swings, probably is repeating here as well. It's very close to it, right? So we can see this pullback. It's almost harmonic. Here was even the half of the harmonic swing. Here is again. This is an XLP, so maybe we will get kind of the gorgeous 8 to sell for this ABCD retracement. Maybe we could consider 109.70 confidence resistance. And if we will get some ABCD pattern, ABCD retracement right to this level, we will consider a chance to go short. In general, guys, right now all eyes stand on Friday, not because of the payrolls, but because of the release of the gross domestic product for preliminary data for the second quarter on the European Union. And this is really intriguing because the data from the Germany shows that's what actually was the reason of the drop on last week. So market was held until the last moment, trying to keep at the current levels. But when the Germany starts to show negative statistics day by day, so it was gross domestic product, retail sales, some other statistics was negative last week. It was just too heavy burden and market collapsed. Now we're coming to the European Union gross domestic product, and TRIG stands around the quarter-over-quarter basis. So if European Union also will show a recession, because Germany has shown a recession on the quarterly basis, it shows negative numbers, and Germany is the largest economy in the European Union. So if European Union economy also will show the recession on the quarterly basis, that will be really very important driving factor that put the shadow on the coming in September European Central Bank meeting. And I will not be surprised if the market will collapse significantly as a result of that. Gross domestic product will be released before the non-farm payrolls on Friday. So that's actually major statistics that investors right now are watching for. So, but today, that is what we have. Let's keep watching for a pullback and what pattern maybe will be formed here.